Hello, everyone. Let's start our today's discussion. Today, we will be completing our chapter of basic income tax calculation. I hope you all remember that we have discussed the basic tax return. We have discussed issues of real estate investment trust, dividend income, trust incomes, interest incomes. Then we move towards qualifying loan interest. And in the previous class, we discussed planning of personal allowance. Today, we will be discussing the last issue in this chapter, which is related to qualifying donations. It is a bit lengthy issue because it will involve discussion of two concepts together, but you all know that all of the concepts get clear when you study with me. Only thing important is to have some patience, concentrate on the concept, and keep a trust on your tutor. Okay? Now, what is qualifying donation? Qualifying donation is considered as a situation when an individual donates an amount to a UK registered charity. When a person gives donation to UK registered charities, it is called as qualifying donation. Obviously, tax department wants to encourage these qualifying donations, and therefore they give tax reliefs on these donations. Like every government, UK tax department also encourages qualifying donations because obviously it is favorable for the economy. Okay, so when a taxpayer makes a donation to a registered charity, we call it as a qualifying donation. Okay, now what is the tax relief on it? There are three tax reliefs available on it. The first tax relief is 20% contribution is made by HMRC. Now, you all know that HMRC is the UK tax department. 20% contribution is made by HMRC, the UK tax department. Whatever you contribute is considered as 80%, and the tax department grosses it up and makes a donation of 20% amount. Okay, number one. Number two, your basic rate band is increased by the gross amount. Now, when your basic rate band gets increased, what happens is that your greater income will be taxed at lower rate. Now, by gross amount, we means amount which includes your contribution and the HMRC contribution. So whenever a person donates an amount to a UK registered charity, we call it as a qualifying donation. Okay. Now, tax department wants to encourage these qualifying donations. So there are three tax reliefs given on it. Relief number one is that 20% contribution is made by HMRC, the tax department. Now, whatever contribution is made by a person, it is considered as net and tax department grosses it up. Okay. How does it gross up? Like you contributed £1,000. So they say, okay, your amount is 80%. We will gross it up by 100% because 20% will be our contribution. Okay, they contribute 20% on a person's behalf, and this is done to encourage the people that, okay, if you will donate, the government will also donate along with you. Your basic rate band is increased by the gross amount, so that greater amount is taxed at lower tax rate. And the third benefit is that adjusted net income reduces by gross amount. Now, this is a new word. We haven't studied the concept of adjusted net income. Now, what is adjusted net income? So for that, you need to understand the concept of diminishing personal allowance. If a person's net income exceeds £100,000, please listen to me. With patience and concentration, we will repeat each and everything. We will do practice questions and we will make these things simple and clear. Okay, so have some patience. If a person's net income exceeds £100,000, then his personal allowance starts to diminish. Because if a person earns more than 100,000, the tax department says that you are a rich man and you do not deserve to get a personal allowance. You should pay the complete tax. because you have become rich. You are earning more than 100,000. Now, how the allowance is diminished, that we first calculate the adjusted net income. Now, adjusted net income means your net income minus the gross qualifying donations and minus the personal pension contributions. Now, we haven't studied the concept of pension yet, but it will come in the later chapters. So from our net income, we deduct our qualifying donation and we deduct our personal pension contribution. This amount is called as adjusted net income. We compare it with the limit of 100,000. And if there is excess, our personal allowance is diminished by £1 for every £2 excess. So what you need to understand is that when a person makes a qualifying donation, his adjusted net income is reduced. Now, when your adjusted net income gets reduced, obviously this excess also gets reduced. So obviously the diminish is also lesser. So listen to me. When a person makes a qualifying donation, he gets three benefits. The first benefit is contribution in the charity fund. Obviously, it is not a benefit for him in the today's life because that is a donation to a charity. It is only done to motivate him. But the second and third are the benefits which he will enjoy. The second benefit is that his basic rate band is increased. Now, when your basic rate band gets increased, what will happen is, that your greater income will be taxed at a lower band and your adjusted net income is reduced. Now, you must be thinking that what is adjusted net income? So the concept is that if a person's net income exceeds 100,000, then his personal allowance is diminished. It is reduced. Okay, but it is not reduced by the value of net income. We first convert the net income into adjusted net income. And while doing this, we deduct qualifying donation value from it. We deduct the value of gross qualifying donation from it. We deduct the value of personal pension contribution from it to calculate the value of adjusted net income. Now, this is compared with 100,000 limit, and we get the excess through which we diminish the allowance. The greater the donation you make, the lesser will be your adjusted net income. And lesser adjusted net income means lesser excess. Lesser excess means lesser diminish. Okay, let's look at practice questions. We have 4 practice questions in this regard. You all know that I make you go through practice until and unless the concept gets very much clear in your mind. Let's look at it. Mr. N has employment income of 74,000, property income of 52,000. He made qualifying donation of 3,600. Now, since both of the incomes are non-saving, so we will only make head of non-saving. Employment income is 74,000. Employment income is 74,000 and property income is 52,000. So if I add up both of them, this gives me total income. Okay. So 74 plus 52. 74 plus 52, the total income is 126,000. Now, there is no qualifying loan interest in the question. So the total income and net income is same. There is no qualifying loan interest in the question. So we will write that as net income. Now you must be thinking that, sir, it is total income. Why are you writing it as net income? Since there is no qualifying loan interest expense, so total income and net income is same. As net income exceeds £100,000, Therefore, personal allowance will be reviewed. We need to review the personal allowance. Okay. Now, how the personal allowance will be reviewed? His net income is 126,000. We will gross up the qualifying donation. He made a qualifying donation of 3,600. Now, whatever you contribute in charity is considered as 80% because the tax department contributes the remaining 20%. So 3,600 divided by 80 multiplied by 100. So the gross qualifying donation is 4,500. Now there is no personal pension contribution in the question. There is no personal pension contribution in the question. So this gives me adjusted net income. This gives me adjusted net income of how much? 126,000 minus 4,500. So this is 121,500. Now the limit is 100,000. So this gives us the excess. Listen to me very carefully. Things will get clear with practice. This gives us excess of 21,500. The personal allowance is 12570. Okay. Now, this excess will diminish our personal allowance by how much? Divided by 2, multiplied by 1. This will diminish our personal allowance. For every 2 excess, the allowance diminishes by 1. So the remaining personal allowance in this question will be, minus 12570. So it's 1820. Now this remaining personal allowance will be deducted from our total income. I will repeat it again. Just listen to me very carefully. By doing this, we arrive at the value of taxable income. Okay, I'll just repeat it again. So, what we have done till here is, we classified the incomes in the relevant heads. We calculated the value of total income. Now, since there was no qualifying loan interest expense, so the total income was the net income. Since there was no qualifying loan interest expense, so the total income was the net income. Now, as the net income exceeds 100,000, therefore personal allowance will be reviewed. Now, the net income was 126,000. Now, always, whenever the income will exceed 100,000, we have to review the personal allowance. Now, there was qualifying donation of 3,600, which was grossed up. Why it was grossed up? The question is that why it was grossed up? It was grossed up because whatever you contribute is 80%. The tax department says that, okay, we'll give the remaining 20%. Now, this gives you the adjusted net income. It is compared with the limit. This gives you an excess of 21,500. Due to this excess, the personal allowance will diminish by 1 for every 2 excess. This remaining personal allowance will be used to calculate the taxable income. Okay, now you will apply the tax on the income. Your non-saving income is 124,180. Now, normally the basic rate band is of 37,700. But here your tax bands will get revised. Normally, your tax band is still 37,700. But this band will get extended due to gross qualifying donation. Now, your gross qualifying donation was 4,500. Okay. Now, your basic rate band will be till how much? 37,700 plus 4,500. So it's 42,200. Now, since basic rate band is still 42,200, the second band will start from 42,200. Now, since the first band has extended, listen to me. Since the first band is extended, the remaining bands will get pushed. Since the first band has got extended, so the remaining bands will get pushed. The remaining bands will get a push. The second band will start from 42,200, and rather than ending on 150,000, it will also end late at 154,500. So the second and third band are getting pushed. They are not extended. The extended one is only the first one. The rest of the bands are just getting pushed. They started late, so they ended late. Due to gross qualifying donation, your basic rate band of 37,700 was extended and it ended on 42,200. Now, when the first band ended late, automatically the other bands got a push. Now, our taxable income of 124,180 will be taxed in a manner that now first 42,200 will be taxed at 20%. First 42,200 will be taxed at 20%. So it will be 844. Just a second. It will be 8,440. Now, normally the first tax band is of 37,700. But in this case, our first band has got extended. Now we are in the second band, which is still 154,500. But obviously our income is not that much. So 124,180 minus 42,200. So remaining is 81,980 multiplied by 40%. So this is 32,792. This gives us the tax of how much? 41,232. So I will repeat it again. I want you all to listen to me very carefully. Now, if a person makes a qualifying donation, he gives something to a registered charity, then what will happen? He will get 3 tax benefits. The tax department wants to encourage the donations. So there are 3 tax benefits. The first one is that whatever you contribute is considered as 80% and the remaining 20% is given by tax department. The second benefit is your basic rate band will get extended. So the greater income is taxed at lower tax rates. And the third benefit is that your personal allowance will get diminished by lesser amount. Because if your income exceeds 100,000, your personal allowance is going in review. If your income exceeds 100,000, your personal allowance is going on review. Okay, now your income 126,000 minus the gross qualifying donation. You will gross up the qualifying donation because whatever you contribute is 80%, the remaining 20% is given by the tax department. There was no personal pension contribution. So we arrived at the value of adjusted net income. We will discuss personal pension contribution in later part of this chapter. We will compare it with the limit to get the value of the excess. Now the personal allowance is 12570. Diminish. For every 2 excess, the allowance diminishes by 1. The remaining personal allowance is 1820, which is used here. We arrive at the value of taxable income and then we have to apply tax, but we will use the revised basic rate band. The basic rate band has got extended. Since the basic rate band has got extended, the second band will also get the impact, because since the first band will end late, the second band will also start late and then it will also end later. So the other bands are getting a push. Okay. So there are 3 reliefs for qualifying donation. And then we discuss the concept that how the diminishing personal allowance has to be dealt with. Okay, is it clear? I hope that you people are getting it. First, we classified the income. We arrived at the value of total income. We compared it with the 100,000 limit. So we said that, okay, the allowance has to be reviewed. Now, irrespective of the donation, if your income exceeds 100,000, the allowance has to be reviewed. Now, since there was gross qualifying donation, we got the value of ANI, adjusted net income. We compared the limit of 100,000, we got excess, and we diminished the allowance. I hope that it is clear, but obviously with further practice, it will get more and more clear. Let's look at one more practice question so that you people can have a more better idea. Okay. Okay. So in practice question number 24, he's saying Mr. X has following incomes. Employment income 36,000, trading income 10,000. He made a qualifying donation of 12,000. Now again, both of the incomes are in non-saving head. There can be multiple incomes. That will not be a big issue. We'll look at a question on that also. Because when we will evaluate the net income, that will be on the sum basis, on the total basis. Okay, let's look at it. We will look at the question with multiple income heads also. The employment income is 36,000. It goes in non-saving income head. Then we have trading income, and that is 10,000. So if I add up both of the incomes, this gives me total income. The total income is 46,000. There is no qualifying loan interest, so this will also be regarded as a net income. Now, in this question, there will be no review of personal allowance. Why there will be no review of personal allowance? As net income is less than 100,000, therefore, no review of personal allowance is required. Now, it is not required to write this statement. When it's less than 100,000, you just claim the full personal allowance. Therefore, no review of personal allowance is required. Okay? So simply, whole personal allowance will be available, which is 12,570. Now, this gives me taxable income of how much? Listen to me. This gives me taxable income of 46,000 minus 12,570. So it's 33,430. Now we have to apply tax on it. Non-saving income is 33,430. Now this lies in the basic rate band, because our original basic rate band is 37,700. But if we look at the revised basic rate band also, the tax band is still 37,700. But since he has made a qualifying donation of 12,000, so it will be grossed up. because whatever you contribute in charity, it's 80%. So this will be grossed up. So this will show a basic rate band of how much. You all remember that due to qualifying donation, there are 3 tax reliefs. The first one is the 20% contribution is made by tax department, that will be made, but obviously it will not affect his tax liability because it is going in charity. The second is that your basic rate band extends by gross amount. Now his own donation was 12,000. If we gross it up and we extend the band, our revised band is 52,700. Now, since his income is 33430, this lies in the basic rate band. So this will be simply 20% tax on it. 33430 into 20%, it's 6686. So this was a pretty much easy one. The income was not exceeding 100,000, so there was no review of personal allowance involved. The tax band was extended, but since originally the income was very low, so it lied in the basic rate band. Your tax band will extend by the gross amount. Whatever you contribute is 80%. We need to gross it up by dividing it by 80 and multiplying it by 100%. Because the tax department says that when you make a qualifying donation, we will also contribute 20% in the charity along with you. Your basic rate band gets extended and your A&I gets reduced, which avoids the diminishing of personal allowance. So I hope that you people are understanding the concept. Okay. We'll continue looking at the practice questions. We'll do 2 more practice questions so that you people can have a more better idea. Mr. X has following incomes. Employment income is 40,000. Property income is 13,000. He made a qualifying donation of 15,000. And he made a qualifying loan interest expense of 2,000. Okay. So let's look at it again. Again, the 2 incomes available only belong to the non-saving head. Employment income, which is 40,000. It goes in non-saving. Then we have property income, which is 13,000. So if I add up both of them, this gives me total income. The total income is 53,000. Now, in this question, there is qualifying loan interest. The qualifying loan interest expense is deducted from total income to arrive at the value of net income. Qualifying loan interest, it is 2,000. So this gives us the net income of 51,000. Okay. Now again, as net income is less than 100,000, as net income is less than 100,000, therefore, personal allowance will not be reviewed. Okay, it will not be reviewed, it will not be diminished. We will get the whole personal allowance of 12570. Okay, we will get the whole personal allowance of 12570. Now, this gives us the taxable income of how much? 51,000 minus 12570. So the taxable income is 38,430. Now we will apply tax on it. Non-saving income 38430. Now we need to look at the basic rate band. Now, our tax band is normally till 37,700. But since he has made a qualifying donation of 15,000, so the basic rate band will extend by the gross amount. 15,000 divided by 80% multiplied by 100%. So 15,000 divided by 80 multiplied by 100, it's 18750 plus 37,700. So our basic rate band is now 56450. Now, since the basic rate band is extended, greater amount will be taxed in basic rate band. This 38430 total lies in the basic rate band, so it will be taxed at 20%, which gives us the value of 7686. So if you look at this question again, it is simply application of the qualifying donation concept. If a person makes a qualifying donation, he gets 3 tax reliefs. Number one, whatever you contribute is considered as 80% because the tax department says that we'll give 20%. So you need to gross it up. Second, your basic rate band is extended, so the greater income is taxed at lower rate. And the third concept is that your adjusted net income will reduce, which will save you from diminishing of personal allowance. But this happens when your allowance goes for review and your income exceeds £100,000. So we looked at the basic concept. We did 3 practice questions, which are pretty much simple. I hope that there is nothing to worry about. It is simple. We first classified the income in the relevant heads. We deducted the qualifying loan interest to arrive at the value of net income. And then we deducted personal allowance to arrive at the value of taxable income. And we simply applied tax on it. We just extended the basic rate band by the gross amount. Okay. Now we look at one last question in which we'll try and cover most of the rules. We'll keep multiple income heads and we'll do multiple things in this question so that majority of the concepts get revised. I want you all to concentrate on it. Mr. N has following incomes: employment income 34,000, trading income 56,000, income from DT 7,000, income from IIP 2,400, non-saving source, dividend income 20,000. He paid qualifying loan interest of 5,000 and qualifying donation of 6,500. Now, in this question, the 2 income heads are involved. One is non-saving. One income head is non-saving. And I think the second one is dividend because there is no interest income in the question. Okay. There is no interest income. So one income head is non-saving and the other one is dividend. I want you all to concentrate on it. Employment income, how much? The employment income is 34,000, goes in non-saving. Then there is trading income, 56,000 goes in non-saving. Okay. Then there is DT. I hope you all remember by now that in discretionary trust, there is 45% withhold. So we gross it up by dividing it by 55 and multiplying it with 100. Okay, I hope you all remember that there is 45% withhold. So it's 1, 2, 727, and it goes in non-saving. Then there is income from IIP, in which there is 20% withhold. 2400 divided by 80%, because there is 20% withhold, multiplied by 100%. So 2400 divided by 80 multiplied by 100. This is 3000, and it also goes in non-saving. And the last one is dividend income, which is 20,000. So I hope you all remember that the first step is to classify the incomes in the right heads. This gives us the total income of how much? 34,000, 56,000, 12727 plus 3,000. So it's 105,727, and this is 20,000. I will repeat it again so that if someone has any confusion, this gets cleared. He has following incomes. First of all, we classified the incomes in the relevant head. Employment income goes in non-saving, trading goes in non-saving, discretionary trust 45% withhold, so we grossed it up. Then there was IIP, we grossed it up by 20% withhold. If it is from non-saving or saving sources, it is classified in head of non-saving and withhold is 20%. Then there was dividend income. Now, the next thing we have is qualifying loan interest. We will deduct it to arrive at the value of net income. Qualifying loan interest. The qualifying loan interest is 5,000. It is simply deducted. There is no grossing up it in this. It is deducted to arrive at the value of net income. Now our net income is 100,727, and this is 20,000. So our total net income is 120,727. Okay. Now, as this exceeds the 100,000 limit, okay, listen to me. As net income, obviously we will look at the sum of the net income, not only to a particular head. As net income exceeds 100,000, therefore personal allowance will be reviewed. I will repeat it again so there is no need to worry. Will be reviewed. The net income is 120,727. We will deduct gross qualifying donation from it and the personal pension contribution. Our gross qualifying donation, we need to gross it up because we contributed 6,500. So divided by 80%, multiplied by 100%. So if we gross it up, this gives us 8,125. Now our adjusted net income will be how much? 120,727. If I deduct from it, this gives me 112,602. The limit is 100,000. So this gives us excess. This gives us excess of 12602. The personal allowance is 12570. Diminish is for every 2 excess, the allowance diminishes by 1. So 12602 divide by 2 into 1, 6301. Our remaining personal allowance will be, I will repeat it, so no need to worry about it. Just listen to me carefully. Minus 12570. So this gives me 6269. I will repeat it again. Listen to me. First of all, what we have done is we have classified the incomes in the relevant heads. We worked out the withholding taxes. We just classified the incomes in the relevant head. We worked out the withholding taxes. We arrived at the value of total income. Then we deducted qualifying loan interest to arrive at the net income. This net income exceeded 100,000. Now, obviously, when you talk about the net income, this is the sum of the net income of all of the heads. It is not only non-saving, it includes non-saving, saving, dividend, everything. Now, this exceeds 100,000, so the allowance will be reviewed. Okay, 120,727 minus 8125. The adjusted net income is 112,602. We compared it with the limit, we got the excess, and we diminished the allowance. Okay, so you classify the incomes in the right heads. You deduct qualifying loan interest, you arrive at the net income, you compare it with the limit. If it is below 100,000, there is nothing to worry about. You get whole personal allowance. But if it exceeds 100,000, you need to review the personal allowance. So when you review the allowance, you look at qualifying donation and you look at pension contribution. Now we have remaining personal allowance of 6269. So you all know that we deduct personal allowance first from non-saving income. 6269. So this gives us the taxable income of how much? 100,727 minus 6269. So it's 94,458. And this is 20,000. Now the next step is to apply the tax on it. Non-saving income, 94,458. But obviously now we need to look at the basic rate band. So the tax band. Our basic rate band is still 37,700. This will get extended by the gross qualifying donation. The gross qualifying donation is 8125 because we contributed 6,500. When we grossed it up, it was 8125. So 37,700 plus 8125, this gives us 45,825. Obviously, when the basic rate band is extended, it will push our higher rate band, which will start late, and then obviously it will also end late. And then this will be our additional rate band. So basically the first band is extended. The rest of the bands are just getting a push. So since the basic rate band is 45,825, so instead of 37,700, 45,825 will get taxed at 20%, which will give us 9,165. And then the remaining non-saving income, will be taxed in higher rate band, 94458 minus 45825. So it's 48633. This will be taxed at 40%. This will give me 19453. And then we will tax the dividend income. Now, since the basic rate band is already used, so the dividend income was 20,000. In dividend income, you all know that first 2,000 is always taxed at 0%. So it is 0. And the remaining 18,000, we are in the higher rate band, so it will be taxed at 32.5% because the basic rate band was used in non-saving. So it's 5850. We will add up all the taxes to arrive at the tax liability. 9165 19453 5850 34468. We will deduct the advanced taxes of discretionary trust and IIP to arrive at the value of tax payable. So what were the tax credits here? 7,000 to 12727. So one was 5727 and the other one was 600. Just the crossing up element, 5727 and 600. So the tax payable is 28,141. So if I'll repeat it again, first what we did was we classified the incomes in the relevant heads. We worked out the withholding tax concept. Okay. Then we arrived at the value of total income, from which we deducted qualifying loan interest to calculate the value of net income. Now the sum of the net income exceeds 100,000. Now, if the sum of net income exceeds 100,000, the personal allowance needs to be reviewed. If the sum of net income exceeds 100,000, the personal allowance needs to be reviewed. And in the review of personal allowance, we wrote net income less the gross qualifying donation. Because what you contribute is 80%. You need to gross it up. You got adjusted net income. You compare it with the limit, you get the excess, and for every 2 excess, the allowance diminishes by 1. This remaining personal allowance is put here. You arrive at the taxable income. Your band gets extended. This extended band is used to calculate the tax. So if you look at the concept, qualifying donation, donation to a registered charity is called qualifying donation. Donation to a registered charity is called as qualifying donation. Whenever you will make a qualifying donation, you will get 3 tax reliefs. The tax department says that whatever you contribute is 80%, we'll contribute 20% on your behalf. Number 1. Number 2, we will extend your basic rate band. And the third thing is your A&I will get reduced, which will save the diminishing of personal allowance. Okay? So with this discussion, our first chapter on the individual tax calculation is completed. In basic income tax calculation, we started with basic tax return. We looked at how the real estate investment trust is dealt with. We looked at the dividend income workings, we looked at trust income, we looked at, if you remember, the interest income rules, the qualifying loan interest, the planning of personal allowance, and then lastly, the qualifying donations. So basically, this chapter is not tested separately in the exam. Like if a question is on employment income, obviously the last part will include the tax calculation. So this chapter will supplement all of the other chapters. I have tried my best to give you the concept with clarity. We did practice questions so that you can understand the rules in a better manner. I have introduced the new rules and we have kept on doing the practice questions so that you get more and more clarity. Okay? If you people have any query, you all have my WhatsApp number to ask it. Okay? Thank you, everyone. And we'll move on towards the next chapter in the next class. Thank you.